everyone, this is Rajendran here joining from Market Calls, and welcome everyone to zila 2.0 weekend webinar. Now, before getting into the session, let's look into one of the most interesting topic, the earning season, right? So let's talk about earning season over here. So you might find something very interesting from the news factors before the earning season. We want to talk about earning season here. What kind of edge you can get from a news-based earning season, right? So these are the kind of a repetitive patterns. What I'm talking is repetitive patterns, and it also applicable to events, something like an ongoing event most likely to come during market hours, right? So it can be an earning season, So or we can say, like, instead of saying earnings, you can say like news-based repetitive patterns. It's mostly news-based patterns. It could be an earning season, or it could be some sort of a board meeting or corporate actions, board meetings, or it could be some sort of an Fed or RBI policy announcement, or any macro announcement, right? So any macro announcement, let it be unemployment numbers from the US markets or some other numbers, but you might find this repeated patterns again and again, right? So something like, for example, let's say a so-and-so stock trading ahead of, let's say, a bank trading lower ahead of earnings or something like that. The heading will be something like that. The earnings season is about to start, but S-Bank turned red ahead of its December quarter earnings, right? So something like this. So the stock was trading lower. That's the message the news news media conveys, that the event is about to start. Before the event, the stock went red, or the stock is trading negative. That's what it happens in S-Bank. So when the day started in S-Bank, stock was trading lower. It went down, and then news articles started quoting that stock went down ahead of the news numbers. So it was just keep on going sideways. And then when the news announcement came, initial direction was in the direction of the downtrend, but then you can see a major counter trend reaction happens exactly against what the news was floated on the morning, right? So something similar information I can show you from S-Bank itself. So again, something like, we go back to the news section, you can find such more stuff. Trading ahead of board meetings. Let's see. Board meetings. Something, the keyword is ahead here. So trading higher ahead of board meetings, something like that. You'll be finding such kind of things. So stock trading higher ahead of board events. This is 8th of January. And 7th of January is what the board meeting is supposed to happen. They're saying the same quote number. Date is around 7th, I guess. It's not 6th. 6th is a holiday because it's a Sunday, and 7th is what the board meeting is all about. So if you look into the 7th, Jan 7th. So morning opening was here. As I said, the 6th was a holiday, and the 5th and 6th is a holiday, Saturday, Sunday, and 7th is what market started trading higher. And then the news would have been floated around here, and then you can see the end reaction, like it's completely counter trend reaction, something like this. And again, I can still quote more from S-Bank. There is some time back, even one more board meeting happened where the similar news even floated, like it's on somewhere around December 20. Yeah. So there's something like this. So December 12, S-Bank shares traded higher ahead of Jan 9 board meeting, and S-Bank shares surged over. S-Bank shares surged over 3% in 2 sessions ahead of a board meet. So we can go back and check those charts. So the December charts around December 13 or 12, you could see similar structure over there, right? So one of the places where the board meet is supposed to start on December 13, and then you can see similar pattern arises. Every time you can see this kind of structure, you can see a simple news are stocks higher ahead of a Fed news, right? So stocks higher ahead of Fed announcement, something like this. These are the clues that a counter reaction can be expected, something like a December 19th, right? So let's say December 19th, what happened? Let's go back and look at the charts. You could see similar patterns over there. Maybe I can get you the S&P data from US markets. So ES mini. So this is SPX will do, because that's a regular market hours. So what was the date? The date was at 19th of December. Let me go back to a 30-minute time frame charts or a Harley chart. So December 19th, I don't needless to say that what happened on that day. This was the Fed announcement day, if I'm not wrong. Right, so that day, it market into comes down there. Maybe I'll go down to 15-minute. So stocks trading higher ahead of Fed announcement, and then lately the crash was coming in. So something like this, you're going to see that, which is mostly you can expect an counter trend reactions when you're seeing this kind of stocks likely to trade open ahead of Fed announcement, or stock trading higher ahead of policy announcements, stocks trading higher ahead of RBI announcement. So something like this. The key Indian equities trade higher ahead of policy announcement. Rate sensitive stocks raised ahead of policy announcements. So all these are just counter trend. Most of the time it invokes counter trend reactions. Right? So you can go back and do a bit of back testing by compare the new sentiment and then how the stock price reacted to that. That particular day, you would have been seen that. Maybe let me go and check the June 6th, right? So June 6th data points. June 6th. So I have the data here, I guess. Say Bank Nifty. Let me take this. Bank Nifty. The date was June 6th, 2018. So something like this, you will be getting a news somewhere around here. The stocks are trading higher, either here or here. Let's see what is the time they had done that. Somewhere around 11:25, right? It's 11:25 AST is where the news started floating in. So maybe look into the charts. Somewhere around this time, they started quoting that news is trading higher, and you'll be expecting mostly a counter trend reaction, something like this. So whenever that kind of news are coming in, follow through is mostly, from an intraday perspective, follow through is mostly crazy. You're gonna expect some sharp counter trend reactions there, right? So at times it will be steep as much as possible. So these kinds of news are clear counter trend reactions from an intraday perspective. I'm talking about from an intraday perspective, right? I'm not talking about that as a major top or a major bottom, but from an intraday perspective, they are very much prone to counter trend reactions. So the keyword, as I said, is ahead of some certain event. Some event is going to happen, and then the news article says that markets are trading higher. Then in that case, you can expect counter trend reactions on the downside. And when the says that the markets are trading lower ahead of some so and so reactions, market usually does some sort of a counter trend reactions again there. Let's say any other. So somewhere here again, RBI policy meet rate stock rise ahead of policy announcements. Most likely all these stuff will be released some 2 or 3 hours before the event is supposed to start. Market opens higher ahead of RBI policy announcement. So I mean, this would have been written somewhere around 10 o'clock or 11 o'clock. Yeah, somewhere around 11:28. So right, every channel is quoting the same. Every media is quoting the same thing there, right? So they're just narrating what is happening in the markets, but that new sentiment, you can expect most of the time. You can exactly expect counter trend reactions there. Now let's try some other news announcement. So zila trading ahead of earnings. Let's see what if I get. So the zila jumps 3% ahead of 3% ahead of Q3 results, right? So what was the time? Okay, probably this they are talking about post market hours. But let's see what was the end result of this. Jan 15th, zila. I mean, nothing to do with market profile, but then just a casual observation. So ahead of 15th, where is 15th here? So 15th day was over. So here, next day market opens gap up, and then it's a straight slide from there on, right? So again, you could find a pattern. You every time you can see this kind of ahead news, you could find some serious patterns out there. I mean, what you have to do is that you have to be really cautious. That's it.
So what you are trying to say is, if any news, we have to first see the news, then we have to think, how we have to react, right? That is what you are trying to tell, right?
No, what I'm saying is that whenever you're seeing that markets are trading higher ahead of Q3 results, markets are trading lower ahead of exactly counter trend reversal pattern is coming from an intraday perspective.
Okay.
Okay, so any doubts on this? I'm not saying that you go on short. Just watch these patterns. These kinds of patterns are mostly misleading patterns. I mean, mostly misleads the speculators. What are the likely reasons for such behavior? I don't know. But they are mostly misleading news patterns. That's what I can say. You can see this pattern again and again. You go back and check any number of data points. Let's say recently any other TCS. I think TCS earnings and all released before market hours. Something which happens during market hours. Mm-hmm. Say any news earning season came.
Sir, RBI policy?
RBI policy, okay. Ahead of
They will release at 2:30, right, sir? Around 2:30 every time, RBI.
Yeah, ahead RBI policy announcements, let's say. trading higher ahead of policy announcement. This is one keyword you can use to go back and check. So this is again June 6th. June 6th, we had seen that it's a counter trend reversal came, and almost everyone was quoting the same thing. Market opens higher ahead of policy. It's just narrating what the markets are saying, but they are coming at the peak levels.
You can check for Infi, Kotak Bank.
Kotak Bank. I can see the Kotak Bank earnings. We need some live commentary explaining what is happening before the earnings season is about released.
Infi
happened during market hours.
I think so.
Mostly they announced before market hours, right?
Infi has changed. They release results after market.
After market hours or before market hours, right? So though that not much of a thing here. Usually I'm talking about the one which is one of the events. Those events can be something like
Reliance.
Something like let's say S&P trading lower ahead of something like that. Something like economic jitters, hits 14-month low on economic jitters ahead of Fed meeting. So if you go back and check December 17th, again you can expect some counter trend reactions coming over there, right? So these kinds of things I'm talking about, just lower ahead of Fed decisions, and S&P Dow Jones ended ahead of Fed decisions. So these kind of things. So once the thing happens, there'll be you can see a complete counter trend reversal coming into the markets. Right? So just go back and check it out. And this is one interesting information which I find very interesting. So come back to the topic. Let's come back to the topic here. We'll talk about gaps. So gaps are kind of interesting setups to me, and the gap indicates confidence. Not every gap indicates confidence, and it gap indicates two things to me. Gap is an investing opportunity. I'm talking about investing opportunity, not a trading opportunity. Opportunity. And gaps from a trading perspective, it is a sign of high confidence, right? So how the gap is coming, that really matters. So based on that, we classify whether it is high confidence or an low confidence buying or selling. Low confidence buying or selling. So it usually it depends upon context to context, but gaps are always interesting. Which gaps to fade, which gaps not to fade is again an art. It's better not to fade every gap. Fading a gap is one of the worst idea a trader could do. But there are selective gaps you can go and fade. Right? So if at all the market opens with a big gap up, and let's say market is opening with a big gap up, we already have multi-day high here, and when the price is opening, it opens with a gap up above here. It opens above, gap up is a high confidence, right? But if they are serious buyers, they are taking a drive, then never ever try to fade this gap. Don't try to fade this gap. You can fade a gap, especially something like we got a similar gap up here, same sort of gap up, but instead price started getting back into the range and started doing more activity. In that case, you can consider fading a gap. You can also fade a gap. Let's say price opens with a gap, and there is it forms an AB poor low. It forms an AB poor low. Again, it started moving up. In that case, you can consider fading the gap again here if it's an AB poor low. Or let's say price opens with a gap, and from the order flow, you are seeing an unfinished business at the day's low. Right? And in that case, you can expect price to revisit day's low, and in a best case, you can also expect price to close the gap as well. So those are the places you can fade those gaps. You need to be able to spot some sort of a weakness, or a gap can also happen something like this. A gap can also happen something like a kind of a mechanical reference. It's a multi-day gap. Let's say when the price is coming up, price opens with a gap up, and it does exactly some multi-day high. Exactly, price rested the multi-day high, and then it took a drive. It looks like an open drive, but then it was a mechanical reference at a multi-day high. Price usually has the odds of coming back down. When it's coming back down, it has the odds of doing some price activity lower. In such a case, a gap can be attempted. When you are seeing such kind of a mechanical reference, when you are seeing a mechanical reference, it's kind of a weaker high or a weaker low. In that case, you can go and fade those things. Or price opens gap up with a high confidence, multi-day breakout, but price started coming back into the range, started doing a lot of activity. Again, you can go and fade it. An AB power low kind of setup, you can fade it. An unfinished business at the day's low, you can go and fade such gaps. But not every gaps are fadeable. Look for weakness. If you are finding any weakness, if you are finding any mechanical reference, then only you should be able to spot. Or something like which happens at 10,900, some sort of an reference level, weaker reference level, combinations of 10,900, some psychological reference, exactly prices at psychological reference, and then gapping up and then going faster, which is also ways we can think about fading those references, right? So otherwise, not every gaps are fadeable. Don't try to fade every gap. Most of the time, fading the gaps will give you significant damage in your portfolio. But as an investor, you can take a lot of advantage on the gaps, like something like, let me go back to the weekly time frame. I watch gaps from the weekly time frame from an investing perspective. And let's say here, I'm going to add, there is one more indicator called gap identifier. That is it, gap. Yeah, yeah. And I have to move my charts background to black color. Style, I make it as a default green and red. And background, I'm going to make it as black. So here, I'm talking about weekly gaps here. So we'll start with Dr. Reddy. Sometime back, it left an weekly gap on the downside. Over here, you can see an yellow color bar. Yellow color bar is a weekly gap. So what is a weekly gap? According to me, and weekly gap is like Monday, there was a fall. Friday, there was a fall. And that was a week low. Next week, Monday, we opened gap down, and that gap never closed at all. So that gap stays, right? So it never entered into the previous week low. So it never entered into the previous week low. Price opens lower next week. Next week open is here, and it started going down, and it keep on going down. So most of such weekly gaps, it moves 25% away, 40% away, at times even 100% away. That gives you an investing odds to fade towards those weekly gaps. You cannot use that as a trading opportunity, but you can always use that as an investing opportunity, right? So these kinds of gaps will always generally gets faded in a medium term to long term. That gives you a clear cut investing opportunity, right? So something like we had a stock on Okat Pharma. That weekly gaps are quite rare. Even if you look into Nifty, that those weekly gaps are quite rare. And let's say Okat Pharma here. So very rarely it gives an opportunity. So this gap never got faded, and this is almost from when the price went down. This zone is almost closely some 600 to 900, right? So it went to 550 levels, and the gap was sitting really at 950 levels, I guess. So that's a movement from 550 to 950 levels. And similarly, I think Mindtree had such gap. Mindtree. The gap was here. That's a 25% gap, I believe. From here, there was a weekly gap. It went down, and that gap was 25% difference. So it came back from 400 levels to 571 levels, right? So that is one more thing. And a couple of gaps like VADL. These kinds of gaps are very rare. Weekly gaps are very, very rare. And look into this case, there was a weekly gap here. I'm talking only about downside gaps. I'm not bothered about upside gaps.
So when to enter, sir, if weekly gap comes?
When there is a significant difference, 50% or a 40% or a 60%. So those kinds of stuff. That is one of the places where you can enter, or you can use other tools like I'll show you some other tools how you can use it to some simple technical analysis tools.
What is the 40-50% of what, sir? Gap, huh?
From the gap, the difference will be 40-50%. Always this target is your gap.
Right, sir. So 40 to 50% means what, sir? I'm not getting that point, sir.
This difference. Price moved out from the gap by 40-50% or even 100% in this case.
Okay.
That's a 100% movement. This gap was almost around 165, and the low here was somewhere around 60 or somewhere around 60. Right? So
okay.
So that
here once it touches,
I don't know. Maybe you would have been entered here also. So there you would have been seen a 60% gap or a 40% gap, where you feel like the markets are looking like a bottoming out, kind of a consolidation is going on. So means every downtrend will not come with a V-shaped recovery, right? So when you're seeing an 40% gap and then allow the markets to consolidate for some time, and then there you can think about entering over there as an investment portfolio, where your returns is always the close of the gap. Close of the gap, you are done. Maybe it might take some 3 months or 8 months, or at least in some cases 1.5 years to close the gap.
Okay, catch you.
Next comes the Bank India, similar examples. So these are recent weekly gaps. We used to track weekly gaps time to time in our Slack. So Bank India, these are some of the gaps we tracked. Bank India, sometime back it was at 180. So these kinds of gaps, at times it doesn't give any investing opportunity at all. It creates, it went down, and then it went reverts back faster. So maybe hardly this 10% or 12% kind of movements, but at times market gives you these kinds of movements. The gap was around 160 levels. It went down very close to 90, 80 levels. A lot of consolidation happened, and it comes and revisits back. So a lot of NPA issue was going on here. So this phase, a lot of NPA issues was going on there. Nobody want to touch the stock. You know that nobody want to touch the stock. So those are the places you have to go and accumulate it. Nobody want to talk good about those stocks. So something like, you can see there is one way. Most of the gaps got cleared, and this is the last one we are thinking about here. This is still at 1,405. Price went down. A lot of consolidation. Right? So a lot of consolidation and a lot of compressed action is happening. And still, the difference is still how much? Can anybody say how much it is? It's been more than 2 years now. This gap is still left open.
Why not 8, sir?
Yeah, so closely more than 75% kind of stuff is there. This is only one gap, which is also there in Nifty Pharma sector as well. Nifty Pharma. I mean, in this case, it should be CNX Pharma. The same gap is there on CNX Pharma itself. So still, this gap is still not clear. It's a weekly gap I'm talking about it. I'm not talking about daily gaps. So this weekly gap still, it is there. I'm sorry.
Sir, this is with reference to equity, right, sir?
Yeah, this is a reference to equity only from an investing perspective.
Okay, sir.
You cannot use it for your short-term trading information or something like that. But only from an investing perspective, where if you want to get a decent investment, kind of an contra betting to fade those gaps. So whatever the gaps you had seen so far, most of the gaps got filled at the same time, and so most of the gaps I'm talking about. I'm not talking about these kinds of upside gaps. Upside gaps doesn't make any sense to me, but most of the downside gaps, something like this, it gives you investing opportunity to fade those gaps.
Sir, I have a question, sir.
Yeah.
Sir, say even if you say even 1 year also, if it not fills, so can we exit, sir? Means when to exit? That is my direct question, sir.
Close of the gap.
If not happen for some time, like 1 year, so can we exit, sir?
Yes.
Is there any stipulated time, so if it not fills, we can exit, something like that? Any exit rules?
Not such exit rules, but when to enter, there are a couple of exit rules, entry rules. So one is like, let's say, I'll take something like an monthly charts. Monthly. That is a monthly. Something like this kind of CNX Pharma. You can go and get some indicators. So these kinds of indicators, whenever it is going extreme, so those are the places where you can expect. So it doesn't happen extreme to positive when it is turning back. So those are the places where you can think about putting your investments down there. It doesn't happens. It doesn't go to the extreme all the time. Very rarely it goes. Right? So those are the places where you can think about initiating contra investment bets. So on the monthly scale, I'm talking about from the monthly scale. So something like PNB. Recently, it was kind of an extreme downswing, and now it's recovering back. So those are the zones where you can expect some such kind of an good investing bets. I believe nobody want to touch PNB now, and so those are the zones where it goes to the extreme and then it turns positive. So those positive moments, it happens somewhere around here or here, which will get you some good investing odds from an investing perspective. That nobody want to touch those stock, that kind of thing, and it turns positive on the monthly scale.
So what is the indicator you put, sir, here?
So it's nothing but an RSI momentum indicator. Or sometime back I coded one more indicator called Hull of RSI. So
Okay. No, sir. Last time you did it.
Yeah, last time I did the same thing.
Yeah.
Hull of RSI. You can still use the same stuff here.
Okay.
With a period of 7 or so, we'll get a similar examples down there. But it has to go to an extreme. That extreme is what I'm talking about over here. Maybe this is a different number. Okay. Or you can also use something like turbo RSI or something like this is turbo RSI, the smooth RSI one, which is a turbo RSI, which goes to an extreme. The extreme reading goes to beyond 80, 90 at times. So those are the places where it get you investing odds. Right, where so you can feel that nobody want to touch that stock, and the stock will be in a consolidation mode. And especially when you should not touch a gap from a trading perspective. You should not trade against the gap, especially when the price is balancing here. Right. So let's say price is balancing. You might seen this many times. Price might be in a consolidated tighter balance. At some time there will be a look below the balance and fail. Lately, price got back into the range where it would have been done more activity here. It would have been plunged and then got back into the range lately. Next day, what happens? Price opens gap up. Right. So compared to the previous day range, let's say that this is the previous day range, it would have opened gap up and then it would start driving outside the balance. This gap, you should never ever fade it, because it usually comes with an kind of an open drive setup. Most of the time it comes with an open drive setup. Or let's say you should not fade these kinds of gap as well. Every time the price moves outside the gap, or let's say there is a balance here. Price was going down and all of a sudden next day there was a gap up and then there is a drive. I'm talking about a drive. So that drive is there. You should never ever try to fade this gap. So this price is getting outside the balance. It could be a good sell-off. Most of the good sell-off, follow-through sell-off will be coming like this. It goes outside the balance, like it kind of a runaway gap, right? So you know what is a runaway gap. So something like, I can show you Nifty or a breakaway gap. I don't know how people call it. I'll show the Nifty here. So those are kind of an high confidence sentiments. Go back to Nifty, kind of a daily chart. So sometime back during last budget, that happened. So look into this balance here. This balance here, the price was trading in a balance. The next day, price opens above the gap up. So those kinds of gap ups are not meant to fade. So you just allow it to run. Otherwise, trading in line, expecting the gap to fade brings a lot of consequences there. Something like here. So there was a greater balance again here. Price is getting outside the balance with a gap. You can see that's a balance. And price opens gap down and it is doing activity. Price is not willing to get back into the balance. You should not fade those gaps. So they could bring some serious impact to your to mean reversion trading. That's not a good. That's a sign of a high confidence markets. So one should not fade it. Again, this is one of the zones where you would be seeing a similar look below the balance and fail kind of concepts here. If you are watching a lower time frame, like a 30 minutes, you might be seeing a balance here. Price looked down below the balance, got back into the range, and then again it gaps up. So again, that is a kind of a high confidence sentiment. In a short term, you cannot expect to fade, right? So this gap is getting faded, but then think about the amount of time which is involved. The amount of time which is involved to come and fade this gap is very huge. So fading this gap is not a profitable idea. It could be profitable, but you emotionally would have been given up. One cannot hold almost 12, 13 trading days to wait for the gap to fade. That is not an efficient trading setup, right? So again, most of the gaps you try to fade are mostly, so you can see a lot of gaps which took a long time to fade it. So you cannot trade this kind of gaps. So this kind of gaps, price opens and then it started moving down with a kind of an high confidence. Better don't try to fade those gaps, especially one which is getting outside the balance with a gap. It's not a fadeable one. And as I said, you can fade only if the price is happening inside the balance. The activity is happening inside the balance. A lot of activity was happening inside the balance, and price opens gap down. It took multi-day high, got back into the range. Those gaps can be faded. Especially on events. You will be finding these kinds of gaps. Most of the gaps on the events are fadable, right? But most of the events which are occurring because of some events like in Raghuram Rajan resigned, or Urjit Patel resigned. Because of that, markets are opening gap down. Those kinds of, and it takes a multi-day high, and then activity started building above multi-day. Activity started building below multi-day high, or price opens gap down, and activity started building above multi-day low. So those are the places where you can think about fading those gaps. Otherwise, fading the gaps are never been fun, especially when it's showing high confidence. So as a trader, you should be able to classify which gap should fade and which gap you should not fade, right? Breaking outside the balance, one should stay away from fading such gaps. Or if the break away from the balance, and if it is an event, yes, you can think about fading those gaps. Casually, price opens higher and shooting outside the balance. It's an initiative drive, kind of an initiative drive. Don't try to fade this setup. That is clearly an wrong setup to a mean reversion trades. So the good way is to go and continue with the long setups. To just go with a balance breakout, right? And then let's say, what are the other weekly gaps we had? I think LNT, there was a weekly gap sometime back. LNT. On a weekly time frame.
So this is weekly chart, right, sir? Bar is weekly chart.
Yeah, the bar is weekly chart.
So every week gap it is. In a week gap.
So only the yellow color bars are the gap, one which comes with the gap, either with the gap up or a gap down. But look into this gaps. So this gap, it have been running for almost closely from mid of 2015 to 2016, and it took 2 years to fade this gap. So it took almost 2 years to fade this gap. So this gap got faded with after 2 years. And always go for good quality mid cap stocks or large cap stocks. Always make sure that the company is stable. I mean, fundamentally it's sound, and you see a gap there. Probably.
Sir, can we take Nifty 100 chart, sir? Nifty 100.
Nifty 100. You may not find the gaps in those setups all the time. Very rarely you find.
No, not Nifty, sir. Nifty 50 stocks, Nifty 100 stocks. That is what I'm saying.
Weekly gap is very rare. You may not find in every other stock. So let's say, name any stock randomly.
Airways, sir.
Which one?
Jet Airways.
Jet Airways. So downside gap was here, and this gap got filled faster. So it took only 1, 2, 3, 4, 5, 6, 7, 8 weeks. It got filled. So upside back gaps, these kind of gaps, you're not bothered about it because it doesn't give you investing odds to short. So, but then those gaps, so there is one more gap. This gap also got cleared faster. So it doesn't happen. So a gap, sustainable gap, and then price going down 45%, it's 45% or 50% or 75%. Correction is very, very rare. It doesn't happen very frequently. And let's say like something like in S Bank, I don't think there'll be a weekly gap. There might be daily gaps, but having a weekly gaps are very rare. It may not happen very frequently. Right? So that means coming Monday, you cannot expect a gap down. That is very, very less. A Friday having a gap down in Nifty Friday went down and Monday there is a continuation. It's very, very rare unless there are events. Such kind of gaps are very, very rare. So whatever the gaps came, so there are a couple of gaps came here. This got clear. This gap came because of UP elections, and then it got a clear, and these two gaps got a clear. This gaps got a clear from here, and these gaps got cleared on the downside. This gap got a clear, and this gap got a clear. Otherwise, you can see mostly it is not a gap driven. Most of the places, most of the Monday, Friday was down, and with Monday opening with a big gap down, you need some negative global sentiment to support. Unless otherwise, that kind of negative news is not there, then it may not be resulting in a gap at all. There are certain cases Monday opens with the gap down, but all in a sudden, most of the time, what the Monday market does is that it Monday clears those weekly gap up. So first thing when the market is opening on Monday, first thing you will be checking here is that is this a weekly gap or not? If this is a weekly gap, what are the odds that it can be faded? Most of the places it opens with a gap up, but then end of the week you will see like there won't be any gap at all. Most of the gap up which comes on Monday because of good global sentiments, price opens above previous week high, or price opens gap down below previous week low. Most of such gaps get faded. Most of such gaps which is caused because of global sentiments will generally don't last more than 1 or 2 days. It gets faded faster. So those gaps you can go and fade it. An event gap, if it's something like an UP elections or some other events, because of major events, some of the stocks, some of the major stocks are going down. In that case, those kinds of gaps may be staying there for a couple of months, but then that also gets faded. Most of the weekly gaps get faded on the downside gaps. But weekly gaps are very, very rare. It doesn't happen every now and then. It doesn't happen. And so we also talked about the scene of crime, right? So scene of crime. Scene of crime. The scene of crime is something like a fast momentum reaction from the markets, and all of a sudden market shoots up with a fast trading activity, right? And it should not be coming like a slow and steady trading activity. It caused because of some news, and then there will be a sudden surge coming into the markets. When certain events are happening, because of that, market crashed 10% or 15% because of the news. The news or momentary crash. Markets are live, and then all of a sudden, market mid of the day, market happens. Something like a surgical strike. Surgical strike. So when was the last time surgical strike happened? Surgical strike, a terrorist attack. Surgical strike day. Even movie also came, right? Uri. So movie came. So when was it? 29th September, right? So 29th September 2016. Let me go back and get the charts. I'll be getting the chart, something like. Okay. Let's say I'll go to Nifty. And I'm going to get 26 September 2016 chart. It's 2017 still. So this is 2015. Okay. I need to fast forward a month. This is 2016. So it's February, March, May, June, August. We are pretty close to that. Yeah, here somewhere here we got it. What was the date? The date was around 29th September 2016. 29th September 2016. Okay, I remember this day. It was a Fed announcement. Because of Fed announcement, price opens gap up, and it started coming back into the range. So right. So before surgical announcement, price broken previous day high with a gap, and US markets was higher yesterday, previous day, and we also opened gap up because global market we opened at the global market close. Market topped out in the first minute, and then the price started coming down. And if you look at the confidence, the more letter got traded below previous day low. It was a low buyer confidence, right? It's a low buyer confidence, and activity was happening like this till around 12 o'clock. More activity, letter A, B, C, D. More trading activity happened inside the previous day's range, and then price was sliding. There was no mid of the day. You can see that more activity started trading below previous day low, and then the event happens here, like this. So that is an you see the activity which was coming like a sharp falling knife, and it's no way related to economy, but it's something which is related to the nation. And there was a deep cut. Those kinds of cuts, we call that as an scene of crime and news-induced sell-off. Most of the news-induced sell-off, these kinds of sell-off, sharp sell-off, will get back. You know, when it get back, hardly it takes 3-4 days to get back to the same zone. So this is surgical. Next day after surgical strike, they try to take the day low, but prior to that, you see that more activity was happening inside the range. They try to break the day low. They might be trying to break the day low slowly, steadily. Not yet happened, but straight away they started going back towards where the surgical announcement came. Right? So surgical strike announcement came. They almost closed that levels. Something like what happened in Sun Pharma. Almost they done over here. Surgical strike. So it's kind of an it's kind of an what kind of event it is. It's more of an we call it as a scene of crime, or SOC, scene of crime, right? So where such kind of event happens and then price falls, but lately price that reaction was a very short term reaction. It's an emotional reaction anyways, and but then market was able to recover, and they finally go and get those levels. And sometime back, these kinds of setups used to happen all the time, right? So recently, Sun Pharma is one example. So Sun Pharma on a 5-minute time frame, we got a breakdown, and finally, but still all the breakdowns. So this is where the Sun Pharma whistleblower announcement came. Sun Pharma, fresh allegations from whistleblower. Price opens price opens here, and then all of a sudden, first 1 minute there was a huge crash. That's more than 10% crash. It's greater than 10% crash, but all the 10% crash, market digested those things, and it was able to recover back. You can expect a similar reactions. If you go back and check both the surgical strike and the Sun Pharma recovery, both are kind of a slow and steady recovery. Right, and similarly, sometime back, Trump was announcing H-1B visas, banana, something like that, and then all the IT stock got crashed. Similar recovery came. That's closely a 5% crash happened in TCS, and all the the recovery happened within 5 days. All all the 5% of recovery happened in a matter of five trading sessions or 6 trading sessions. They are back at where the news announcement came. So like a thief who come back to the scene of crime zone to check whether they left any evidence or not. The price will again revisit those levels to clear where the price they started. And similarly, sometime back there was a in Lok Sabha, there is a no vote of confidence level was there. All of a sudden, mid of the day, there was a 100-point crash during middle of the day, and it tend to recover back. Anyone able to recollect what day it was? It was, let me get. So recently we had a Lok Sabha no motion conference, no confidence motion. Right? So that date, what was the date? July 2018. So July 20 is what the no confidence motion came. Maybe I'll pull up Nifty here. I'll show you. In this chart, I don't have data from July, but if I go to daily chart, July 27th. No, not this one. July 20th, right? There's one more day, there was a sudden market crash. We'll get it from here. Kind of 1 hourly chart. There was a news saying that no confidence motion is scheduled or something like that. Yeah, I think this is the crash. I think the 18th July. 18th July. No confidence. Right. So this is a news which was hitting the wire, and all of a sudden markets are crashing during middle of the day. That's a hourly chart, and in the hourly chart, if you see, the price was market was trading really good, and then all of a sudden there was a sudden crash coming in, and market went sideways, and price tend to recover back where they started. So when the news came in that there was a sharp crash, but then they are able to recover back all those crashes in a matter of some 3 to 4 trading days. Those kinds of things usually it happens. So mostly emotional sellers try to react to such kind of news, right? So something like which happened in last Friday. So last Friday, anyone know why the market was down? Nifty Friday, MSCI, some MSCI news announcement was there saying that what was that news? Something like the strategic of investment cap may trigger 1 billion outflow from the index. Yeah, this is the news. MSCI may reduce India weight in emerging market index, right? Or So this is the news they got into that, and that triggered a sell-off. That triggered a late sell-off. It's a news-based sell-off, not a bigger one. Any news-based sell-off, it is not a serious sell-off, then such kind of news, like something like a 3% crash or a 4% crash, it doesn't triggers any margin call, right? So these kinds of news, it doesn't trigger any major margin call. So it just created some panic around 11 o'clock. The news got floated, and then the price started coming down. It's mostly a news-based sell-off. You can also consider this as a scene of crime, right? Whereas if you look into the same case, in case of Z Limited, let's bring out ZEAL over here, ZEAL-IE.NFO. It is also a news-based sell-off. It is also an emotional reaction from the participation, but there is something different over there between these two, right? So something like a ZEAL or a ZEAL crash or a DHFL crash, what it happens here is that it triggers margin call, and that brings a lot of avalanche reactions to the investors. So just give me a second, I'll reopen again. So something like this ZEAL crash, it is also a slow and steady crash. It's a slow and steady crash, but the ZEAL crash would have been triggered on margin call there. So what, anyone know what is a margin call? Does anybody know what is a margin call? Can anybody explain? Okay, let me explain. There are players who invest based on margins. So brokers provide margins to invest in such kind of stocks. So they invest in Axis Bank, ITC. So let's say Axis Bank is also a broker. And you might be as a client, you might have a fixed deposit of 50 lakhs. So 50 lakh FD, fixed deposit you have in Axis Bank. He's also a broker, and so what they do is that they give up to 5 times leverage on the cash markets. Like so, they give X5 5 times leverage, and that will allow you to go up to 2.5 crores. Or it depends upon your relationship. They might, it could be 3 times or it could be 5 times. Depends upon your relationship with the banking, or it could be Axis Bank, or it could be something like a Carvi, where you need to show some collateral, Carvi, and you can get such kind of margins to invest in this. 2.5 crores will be invested, let's say in Z Limited, at Z Limited. And all of a sudden what happens is, so that's a 5 times leverage. That's a 5 times leverage. He's an investor, and there'll be a interest rate will be charged. So he invested in ZEAL, but for the same 2.5 crores, there will be a weekly or monthly interest rate will be there. Right? So assume that one of the day ZEAL crashes 30%. ZEAL was crashing 20%. What will happen to his money? His 2.5 crores will become how much? There was a 20% crash. It's 5 times leverage. So that money will become, there will be a portfolio loss of closely 50 lakhs all of a sudden. So his net position is now worth only 2 crores. That means he lost 50 lakhs. That means client lost 50 lakhs. And so what happens is that broker forces the client to square off his positions, because almost the money which is lying in the Axis Bank is only 50 lakhs of FD. So the client will be forced by the broker that 50 lakhs is his leverage is done. So it's a high risky bet anyways, but still it's an investment thing. So he'll be keep on rolling over in a cash segment again and again and again. But the moment there was a 20% crash, what generally happens is the broker will be forced to square up, because if it's going to be 30%, it becomes a 30%. It becomes even more scarier. The loss will be again another 25 lakhs will be added to the client account. So when it is reaching 20%, the client receives a margin call. They call it as a margin call. Most of the clients receive margin call. Who are playing in those segments, they will receive a margin call. And that means margin call means you are supposed to forced to close your positions. And this will create avalanche reaction. This is not the only client. Maybe many other clients might be involved in taking ZEAL as a positional investment to take a leverage game in the cash market for investing purpose. So they might be happy to roll over their positions in cash, right? So most of the HNIs, they love to do that. They love to play the leverage in the cash markets, and that is a high risky bet. That creates, when this guy is liquidating, it again forces market participants to, he'll be exiting in a large quantity, right? Again, that triggers again one more avalanche call for one more margin player who would have been whose threshold would have been hit another 20% by one more client. So that he will be forced to sell off. It creates an avalanche of reaction, and then that is what it makes the investors to come and sell. So if you look into the cash volume in ZEAL, if you're seeing more and more volume coming in, that means a lot of margin call is getting triggered over there that particular day in ZEAL. So we don't call this as a scene of crime. Not necessarily price has to revisit those scene of crime zones. But if you are looking on a Harley time frame and try to plot a volume, if you're seeing more and more volume is coming in, that means it is an long-term players, or the margin call is getting triggered, right? They might be unwinding their positions. So that is the ZEAL here.
Even same thing happened for housing finance also, right? So recently.
DHFL, yeah.
Yeah.
So all these could be, you see the volume, big volume coming in lately. All these could be margin call. Margin call would have been triggered. Broker might be squaring off the client position with or without client consent. They are forced to square up. Otherwise, end of the day, broker has to pay the money. If the client is not still willing to pay those money, broker has to, end of the day, they have to settle that money to the clearing.
So this will directly affect to Nifty also, right, sir? Because these are all indices driven.
Yeah, it's an index stock. Definitely, it might have some impact, but not a great impact, because ZEAL, the ZEAL constituent in Nifty is very, very less, hardly less than 1%. I think so. Maybe
okay. Sir, usually, when these situations will come, sir, when we can predict, usually these kind of margin calls, is it in expiry days or is it on?
No such kind of dates. It can come any day.
No, we have to be cautious. No? So that is the reason. Just
you never know. But one thing is that it is margin call. What you should not do is that you should not go and invest in those locations. People will be finding as an opportunity to add to their position, but it's a margin call. Once margin call is getting triggered, means most of the long-term players are getting out of the system. If long-term players are getting out of the system, they don't give a solid commitment to the investing business. You think about MRF, right? So MRF, in most of the market crashes, if you look into the MRF charts on a daily or something, the commitment given by the long-term players are quite huge, right? So they're not exiting at any instant until 2019. Now only some small crashes started coming in, but then every crash has been bought by the investors. So they're giving a solid commitment. When that commitment is going away with some sort of crashes like ZEAL or some sort of crashes like Dish TV, long-term players generally go outside the system. Sometime back, such kind of margin call triggered in Dr. Reddy. It was.
So these margin calls can be identified only through volumes, right, sir?
It can be identified through volumes.
How would be the big, sir, volume? Yeah.
It will be relatively big, something like you can see the volumes here. Market, it will be crashing 16%, and the volume will be relatively high. Last 4 years, market never seen such kind of volumes. This kind of volumes never seen. Again, there is one more gap down coming in with a very serious volume. So those are the places where investors are moving out. Long-term money is getting out of the system. They don't willing to give any solid commitment at those locations. Again, recently, if you look into the other stuff, like price also went down, and volume also relatively bigger. Means price would have been down by more than 15%, 20%, 25%, 30%. Those are margin calls. So DHFL is one case where you can see there was a big margin call would have been triggered. All our investors would have been gone out of the system. A lot of margin call would have been triggered there. So again, this kind of price will never mean revert back. This never happens. This never happens. All you can do is that you can see that price keeps on going down and down, and one fine day you'll be finding at some 10 rupees or 7 rupees, something like the Suzlon or Unitech. But whereas a new investor, they will find like an value investment. They will think like price is doing some value, so they find it as an opportunity to invest in those locations. Once margin call is done in any stock, hardly it recovers to the same level. It's very, very rare. Usually it usually goes to a penny stock, something like a Vakrangi. Again, a lot of margin calls would have been triggered in Vakrangi here. So the way price is triggering down, and something like DHFL was there. What was the other stock? Dish TV. Dish TV would have been maybe something is fundamentally wrong. Once margin call is getting triggering, investors are going out, means something is fundamentally wrong with the stock. You will never come to know. It might take a long time to come to know that something fundamentally getting wrong. So something like the DHFL, when it happened, DHFL, the margin call trigger. By that time, you don't find any reason for the stock to be fundamentally wrong. This is during 21st September that drop, 60% drop was happening, and maybe you might find news saying that the news comes always late. Right? There was a 95% drop in the revenue or something like that. What was the news recently? Yeah, something. The DHFL sees 95% drop in fresh loan disbursement in Q3. So something is fundamentally wrong. That news will be coming later on, 2 months later or 3 months later. But immediately you won't realize it. You'll find many people find this in a value opportunity to add to their positions. Right? So again, Infibeam, similar story there. Infibeam, similar margin call would have been triggered there. Infibeam. So that is, again, this particular day there was a 70% crash in 70% crash was coming in. You can look at the volume. Volume was relatively high. Long-term players get out of the system. It never ever recovers from those levels. Right? So mostly once the long-term money is completely out, people will find an always opportunity to exit. Long-term players always find an opportunity to exit. Once it is done, only it will be controlled only by manipulators, speculators. That's what in Arkham you can see. Arkham is totally controlled by speculators. There is no long-term money sitting there. Ideally, there is no reason to play in Arkham. Long-term money is nothing to do with that. An institution, why they have to come and buy Arkham now? But it's still those kinds of instruments trade in the markets, right? So these kinds of instruments trade in the markets. They will double, triple in a span of time, right? So they're not long-term players. All of a sudden, news will come. The price doubles. It went from 10 rupees to 40 rupees. Ideally, they're not long-term commitment players, right? So they will be playing the news. Once they are out, they'll be getting out of the system, and you can see again price sells off, again price doubles, again goes down, again price doubles, or it makes 30-40% faster, and it comes down. So you can see when there are no long-term commitment from the participants, stock struggles it is only a trading environment which you can see over there. Only short-term investors will be there. They are mostly speculative. Only speculation happens all the time there. But there is no fundamental level investing happens in those kinds of sectors, right? So something like a Suzlon, something like GTL Infra, all are kind of an. There is no fundamental reason to for the institutions to come and accumulate those stocks. It's all in a sudden stocks double, triple, and finally, slowly, steadily, it goes for a deathbed, right? So from here to here, it was almost an 40-50%, and from here to here, it was almost 100% returns, or 300% returns, or 400% returns at times, right? So from here, it was around 6 rupees. It went to 36 rupees. But they are not strong committed investors. So when you are seeing this kind of stocks which are going up for no reason, right? So means make sure that they're not. Investors are not, especially the funds are not holding it. Funds are not holding it. It's only a speculative stock. A speculative stock can go 300%, 400% faster, but how much faster they go, they will come back at the same speed. Right? Because some other day the margin call would have been triggered. During 2008, I think a lot of margin call triggered in 2008. Some other day the stock was down by some 20-30% some other day. I think that is Unitech. Unitech one, I think twice it broken 25% and 50% down, and still it used to trade. Once those margin call is received, it never used to bounce back. So the crash which was happened here from 457 to almost 387. So those are mostly margin calls. This particular day it was almost down by 13%. Again, next day it was another 13%. So those are the places a margin call. A lot of margin call would have been triggered. It hardly bounces back to the same old level. Right? So
even PNB, you don't call it's a margin call, sir. PNB.
PNB.
You don't call it's a margin call. We don't want to consider margin call.
Let's check. This particular day, right? It was down by 9%. Again, one more day, it was down by
almost 300 plus. It's reached 76 in a matter.
So I'm talking about something like a 15% crash, and again 25% crash, 35% crash, 50% crash. Those kinds of setups I'm calling about.
So this will not come under.
This is not a margin call. A 10% stock down or 5% down. Yeah, maybe it might trigger someone's margin call, but it will not create an avalanche reaction.
Okay.
Think about it. A stock is going down 20%. It triggers everyone's margin call.
Okay. So if this is the case, investors are not out till now.
We may not know. There could be some other reason, but if margin call triggers happens, investors will be most of the investors will be out of the game, and there will be lack of commitment from the players. Long-term commitment will be really not much attached to that thing. Now the people who are coming for a fresh investors, they don't willing to come back into DHFL for a variety of reasons, or fresh institutions they might come and buy there. Existing institutions will not come and accumulate. Most of them, they will be finding a reason only to dismantle their positions from which are the stock which got a margin call. And NSE also publishes a report on day-to-day basis, like India. I think under cash segment they have one more report name called margin calls. I mean, not margin calls, but margin report. They generate a margin report. Equities. CM daily reports. I think one of the report is about margin trading disclosure. These are involved in cash market segments. So here, which broker is having providing more funds on margin segments? Which stock is having more margin segments? You'll be able to get to know about it. Right? So probably, if you look into, you'll be able to check whether the margin call has been triggered here or not. Let's go back and check ZEAL. So ZEAL. So ZEAL, what happened? So what was the two columns there? Quantity fin by all numbers, total number of shares, and amount fin by all the members. So go back to ZEAL. So how much positions? Almost 19 crores of margin call was there. This many number of shares, right? So if you go back one day before back, and you'll be able to see how many margin call was there. Right? So which stock is having a most margin call players in that particular segment? You'll be able to put some filter, and you'll be able to see in terms of data filter. When these stocks goes down, it really goes down really larger. Certain stocks doesn't have margin call at all. So, but something like this, maybe they might be slowly moving stocks, something like HDFC Bank or some high quality stocks. But when those stocks are getting triggered, so you can see S Bank, Tata Steel, Sun Pharma, right? So these are the stocks are vulnerable to more people play margin calls over there. So they play leveraged bets over there. So something like you'll be able to compare previous day with today's data and to check whether any margin call has been triggered or not. Right? So you can do some analysis to check whether margin call has been triggered or not. You'll be able to look from these reports. So a lot of players play margin calls. Right? Mostly they are these days. Mostly it's some sort of on collateral. Okay. So we'll do one thing. We'll take a short break and we'll come back and we'll look into the key reference levels. How we can determine whether it's an what are the key reactions to those key reference level. That's what we're going to talk about it, right? So let's take a 15-minute break, and we'll get back by 15:45 p.m. Right, until then, I'll be on mute. Thank you. So we are discussing about a margin call trigger, right? So it is not just investors receive margin call, even traders receive margin call. So traders are even the promoters receive margin call. Promoters might be pledging their shares. So let's say promoters might be pledging their shares, and stock collapses some 50% all of a sudden because of some news, and promoters are the first one to force to liquidate their position because they are forced to liquidate from the markets because their shares are being pledged, and it doesn't cover their stuff. So promoters will be forced to liquidate. So one such event happened some 3 days back in Hong Kong markets. So Hong Kong, all of a sudden stock crashed 80% stock crash one of the promoter and his wife positions got liquidated. So there was, without any warning, there was a property developer, Jia Yuan, got crashed almost 70%, and then later on, the promoter is forced to liquidate his positions as well because there was a 70% crash. Stock was pledged, and in fact, option writers also they receive a margin call. Option writers generally they give some sort of an asset class. Option writers. It's option writers. Those who are writing straddles, strangles on earning seasons, right? So it is prone to outliers. Right? So think about someone who would have been written in zeal short straddles, right? So they might be shorting the IVs. So option writers receive margin call because they would have been given some collateral like 50 lakhs as a mutual fund deposit or a fixed deposit or some sort of some sort of an collateral they would have been given, or some 2 crore. Think about somebody would have been written zeal limited. So let me go back and show you how the zeal options would have been behaved. Let's take an zeal stock options. Let's say 350 options, something like an 350 options or 400 options. 360. Call not support. 370. 360. So something like this, 10 paise option, or somebody who want to write some cheap option, somebody even they want to write some 380 options. Right? So think about the 1 rupee option writers or 2 rupee option writers. The returns, I mean, the loss which was made is quite phenomenal. Right? For every 1 rupee, they have to pay back 80 rupees, something like that, or something who write strangles or straddles, right? Wherever they would have been written, they would be, tested their patience royally, and if the position size is huge, they also get margin calls. So all their option positions will be squared off from the market. So whatever the positions they had, account goes to zero, or even at times even negative, hugely negative if there is no proper risk management, and then the option writers receive a margin call as well, right? Okay, so let's go back to the zeal market profile, and let's try to understand what happened from the zeal perspective before the stock plunges. Do we have any subtle clues over there or not? Do I trade zeal? Not, I don't. I usually go with some liquid instruments, if at all, if I want to trade. I mean, zeal is a liquid instrument. Many people trades it, but personally, I mostly go with something like an HFC bank or an ICICI bank, or something Reliance, or something like more from the Nifty 50 pack. Okay, let me check zeal here. Duplicate ICICI bank, and I'll make it as zeal. Okay, that's a crash which came in. Study the charts. You need to study right from the start of 1st of January, or any market tops has been formed. No such clues at the tops. 1st Jan high is not has been taken out. It has been momentum month for the zeal, because the first Jan high, it never taken out at all. It's never taken out. In fact, do they have any other swing highs made? Yeah, it's not. That's not a major swing high. There is some more high here. Do we have any other more highs? Because the major swing high. This is a major swing high which made around 508. 508. Not much of clues there. So a lot of emotional structures. So one more thing you should not do is that when a structure is getting this emotional and you are seeing a lot of single prints inside, so a lot of single prints, 1, 2, 3, 4, right? So those poor structures, we don't try to fade. That odds of clearing those poor structure is very, very less, right? So which is having more number of single prints inside the poor structure. You should not fade those poor structures, right? So you can fade a structure where there are a lot of anomalies, where there are no single prints, but you can find a lot of anomalies here. So if this is a poor structure and you're finding 3 or 4 anomalies, then you can expect a great fade to a greater extent, right? So these kinds of setups can be faded, right? And whereas if it is involving too many number of single prints, even if there are anomalies, try to avoid fading it. It may not clear at all. It may not clear at all because a lot of single prints, that single prints will act like a resistance. So avoid fading those single print structures. Whereas something like something like the one which is happening like this. Sorry. Can I get any poor structures here? Not much. It's 1, 2, 3. So these kinds of poor structures can be faded. So there are no single prints at all. These kinds of poor structure has more odds. You can see the number of anomalies coming here. It's 1 here, 2, 3, 4, 5, and 6. So these kinds of things, it doesn't has any single prints into it. This has more odds. It fades quicker. Again, you look into this 1 and 2 and 3 and 4 and 5. So these kinds of structures has even more better odds compared to fading it, right? So otherwise, you can see that these kinds of structures got faded relatively faster. But when it is coming up with more and more single prints, try to avoid fading those things. Maybe fading is not a recommended thing, but if you have such kind of emotional structures, most of the emotional structures are meant to be repaired if there are no single prints. Single prints, if you have a single print, it might come into a double distribution or a triple distribution, something like that. It may not, we cannot treat that as a poor structure at all, right? So it could be some other different structure. Whereas these kinds of structure are nice and clean structure where it says it's an emotional sell-off. It's an emotional sell-off, right? So again, not every poor structure is a fadeable one. And you look into those other poor structure which happened at the past, it never got revisited because it comes with a lot of single prints. It comes with a lot of single prints here. Where was it? Yeah. So it is kind of a multi-distribution day. Most of the multiple distribution day looks like a lot of poor structure, but then it's a multi-distribution day. But it looks like a lot of anomalies, but those anomalies are coming with a lot of single prints. So try to avoid fading those things. It may not get repaired at all. And whereas think about this 21st December, there is 1 here, 1, 2, and 3, and 4. So these kinds of things are, it's okay to fade these kinds of structure. But one which is coming with too many single prints, kind of a double distribution or a triple distribution, you should be always careful in fading those poor structure. It may not clear at all. right? And these kinds of structure you can see it comes with 1 and 2 and 3 anomalies. It's kind of a poor structure, but then it get faded. Again, 1, 2, and 3 are not much. It got faded. Think about something like this. A lot of single prints, 1 and 2 and 3 and 4 and 5. So okay, don't try to fade. Okay, that's the recent one, last Friday crash. Don't try to fade it because it looks like a poor structure. Market doesn't need to clear this poor structure because it is, if you look at count the anomalies, it was 1 and 2 and 3 and 4, total 4 anomalies. So market will clear those anomalies. Don't try to fade this. It is not an it's not a right it's not a right setup, right? So probably yes, it's an emotional sell-off, but you also understand that it's a margin selling is happening there. Maybe what could happen is that Monday market opens, it will it opens with some 20% higher, right? But eventually 10% higher or 20% higher, but eventually it won't sustain at all. Think about the very next day DHFL was broken by 60%. When DHFL was broken down by 60%, next day I think it was opened by some 20% on the upper side, but eventually it lost all its gains. So let me go back in DHFL and I'll show you. So this is the DHFL. The very next day, it opens kind of an inside bar, almost 20% higher. It created an excess and then it came down. But still, it is not a recommended one to go and buy. So you'll be always going to see such, once there is a margin call trigger, next day price gaps up. So always the other margin call players will find as a reason, or the other investors will find as a reason to exit that stock. So more and more long-term exits will happen. You can see the volume would have been spiking up every other day. Means long-term players will find as a reason to invest, exit those counters once a margin call get triggered. Now more people who are not participated in those call, they'll find as an opportunity to exit, and only dumb money gets into those kind of positions. Otherwise, do we get any clues that I don't see any clues that why the stock should fall? But at least when it had broken a multi-day high, when it broken, yeah.
So sorry, sir. What I meant to say, in the jail, even there will be downfall now, sir, from now onwards, as is known as a call margin.
Yeah, definitely. More and more long-term players will find a reason to exit now.
Okay, sir.
Yeah. So that doesn't mean like you can go and short zeal at 300. So it will be even more dangerous because next day you will find another 10% up or 20% up. Let's say Monday they could even open somewhere around here, and so here, and then they do a lot of activity, and then they will go down slowly again. They might do some crazy activity and go down. So trading is going to be really difficult over here. Only thing is that
Yes,
as an investing perspective, you should not play this counter. A lot of speculation is going to happen here. Maybe even it could move into FNO ban also, right? So, but a lot of speculation happens from here on. So once you might finding the volatility will be increasing much. So you can play this kind of stocks with some sort of systems. Systems might be profitable here at this point of zones because wild swings will come among, a lot of emotions will be there among investors and traders. So they'll be pushing the prices to the extremes. But once the investors are out, slowly the investors will be slowly getting out of the system, and they don't get back. They don't find a reason to get back unless something that's fundamentally a radical shift change coming into the markets. When there is a margin call, always the fundamental results come a little bit later, that some issue with that kind of companies or something like that. But you may not find it immediately. People will find this a value addition. Dumb players will find a value addition to come and invest at these counters. And there is one more Dish TV. I don't want to look into Dish TV because it's most of a mid-cap segment. but it broke a multi-day high, quickly got back into the range and started completely. It is a what? It's completely ABC. It's still not an outside bar, but it's completely ABC and started going down ABCD. It made an outside bar and it's completely, that's a rejection. The A period was an lengthier one, right? So the A period got penetrated back into the range completely, and they got they completely moved down completely to the other side. It's just still a kind of a high confidence setup. So you see price opens and they completely rejected this balance. So the entire 3-day balance has been rejected. 3 days of trading activity got rejected, and the price was moving like a sharp knife. So that is the pattern. We could see that it is not an ABC outside bar, very close to ABC outside bar. And let's look into the other stocks. This is an ABC outside bar here. Here. Are there any places ABC outside bar is seen? No. No, it's not an ABC outside bar. All our ABC elongations are coming in, but nothing is an ABC outside bar. Okay. Think about this. There is one AB power high here. So this AB power high took almost how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9th trading day. They came and touches those levels and then they got back to the range. This took almost 9 trading days, but eventually it got cleared. And kind of from there, double momentum days are always kind of on top. 16th Jan, 17th Jan. That's it. So there is only one double momentum days from the swing high from 474. Right, so it's a double momentum pattern. That is the only thing we can get from that. The recent swing high, the recent short-term swing, which came from 14 Jan to 474. Otherwise, nothing much to look into. Zeal. There are no clues other than this double momentum days. Which also clears a lot of stops there. It took all the stops and then finally it creates a double momentum. That double momentum setup itself a sign that this is not an this could be a one possible top setup here. It also looks into Dish TV. Let's see that what was there. I think Dish TV itself a dead counter, so let's not look into that. Nothing much to look into there. Any other stocks you want to look into it so that we can do a complete top-down analysis and then we can start right from the scratch. Any stocks? Or if not, I'm gonna look
DLF, sir. DLF.
DLF. Okay. Always start with quarterly to get a perspective. Right, so quarterly is in nothing much. It's still going down. Quarterly itself, it's one time swing lower, down and down and down, down, down. It's almost now 1, 2, 3, 4, 5 quarters down. That's what the quarterly is doing. So a lot of long-term sell-off is still there, and then we'll get into monthly. Monthly again, kind of, and it took multi-day low. No, it only broken 2-day low closely. Very precisely, it broke a 2-day low and it went to 3 days low, the recent swing low. Right, but still the overall trend is down here. The overall trend is clearly down from a monthly perspective. And let's go down to weekly. So quarterly is down, monthly is down, and weekly is also down. Right, so price was consolidating from there. Now price completely got outside of the balance. Multi-week low has been broken last Friday. So a lot of consolidation activity happened in this band. Right, so a lot of consolidation happened, almost very tight consolidation, something like which happened in Nifty so far. So that kind of weekly consolidation happened in Nifty. I mean in DLF, and then we got a multi-week breakout. A multi-week breakout. How many weeks breakout? 1, 2, 3, 4, 5, 6. 6-week breakout, or 8 weeks breakout has been happened. That's what from the monthly. So the trend was down in quarterly, monthly, weekly, and most likely daily as well. So every other time frame, so there was a serious crash coming, but then it tried to take multi-day low, but it plunges below multi-day low, but then got back into it above that October. November, October 26th low, October 22nd low. That's what it taken out. It came pretty close to the October 2018 low. Then it restored most of the levels. Now that's a serious correction. Any reason why the correction came? Because of earnings season?
CBI went and asked for the documents, and
Okay.
Haryana ex-chief minister was raided.
Okay.
The land issue maybe.
So what was the downtrend? It was closely 10%. So 10% crash, that doesn't mean like it could trigger a sell-off. But maybe yes, some margin call might trigger, but not every time a 10% crash will create an avalanche of margin calls, right? So maybe a couple of people margin call would have been triggered. Nothing much seriously to be taken out. But definitely it would have triggered some multi-month lows. And let's look into. So these kinds of setups, if at all, let's say this is my daily, right? For further narrow down to Harley. So there was a deep excess on the Harley time frame. So you can see that it's kind of an hammer pattern, right? So, and it also forms a negative bar. So it is not a momentum auction reversal. So still, this could be having some negativity coming down still. Maybe if at all any activity has to happen, maybe price might try to find a balance in this band for some time before taking some other steps, right? So a lot of balancing activity could happen in this band. Still, it cannot be a reversal. So, but a lot of balancing activity could happen. For the current sentiment to get settled down. But that is not a margin call, at least. Right? So, kind of a 15%, almost 20% crash, I think. 20% crashed, and then almost 10% got recovered. And by looking into the profile perspective, DLF. Same 10 paise TPO. Kind of a trend day. So it's a classical trend day. Then last 45 minutes, it went on extreme crash. Maybe some emotional sell-off would have been happened in cash segment. But then on the higher side, do we have anything like AB power high or so, which indicates a potential reversal? Not yet. Nothing of sort. So there is an kind of an nothing much to talk over here. This is a kind of a trend day. So maybe when the price is falling this deep, most likely price have all the odds of balancing here in the tails initially. That's what we can think about it. Not immediate positivity return, we can't think about it. It may be some sort of a balancing structure followed by something else, because all the time frame is going down and clearly nothing much to fight. A mean reversion is very, very risky here, this kind of markets. And that too, which is coming up with a lot of single prints. You cannot treat this as an, as I said, these kinds of, you cannot treat this as an anomalies. You cannot treat this as a poor structure, and you cannot bet like this will get faded. So more anomalies which are coming with a single prints. A lot of anomalies are coming with the single prints. So these emotions will be carried forward for the Monday as well. So nothing much to be, even any positivity coming in, that will be used as an opportunity from the investors to dump their stocks. Trading will be very complex when it comes to stocks like DLF. These kinds of stocks will not be a tradable one. So if you're gonna put your fingers there, all of a sudden you'll be experiencing a faster profits or faster losing money. So mostly it's very risky to trade this kind of setups, especially when you're having more and more anomalies. Usually it's a sign of a continuation on the downside. So it is not a sign of an momentum exhaustion or so. So right. So there was a short-term momentum exhaustion, but the same sentiment which was there on Friday could spill into Monday as well. But definitely it's not going to be easy to trade on any of the sites. Mm-hmm. There was one AB power low here, 7th Jan, and it took to clear it. It take almost how many days? Almost on 21st Jan, it came and cleared those levels. So at least one weaker reference, one should be able to see that, and then nothing much to look into. It was a G3 low, 1 and 2 and 3. You can see the G3 lows, as I said last time, if it is more and more getting closer, see that it's getting closer and closer and closer. All the lows are closer. It's a G3 low. And when the price is breaking, it breaks sharply with a strong liquidation. So that's a G3 low there. And you can see I'm expecting a liquidation there. It's an ABC elongation. It's a clear ABC elongation. So it's start of a downtrend. So most of the ABC elongations are positionally vulnerable. And we should avoid it. If this G3 low is there, that's a sign of a liquidation there.
Sir, CET, sir. CET ties.
CET also broken.
Yes, sir. Actually, for long it is. Still in a balancing mode.
Okay. Okay. So price had been broken down. Not much of volume. So volume, there is no volume in the cash segment at least. Price is breaking the volume marginally. It had broken multi-day low. As you said, such kind of things requires a volume confirmation, or such kind of things requires a follow through on Monday. Failure to follow through, they will first thing what they will do is that it could be one of the fake out kind of setups. Right? So because there was a balance here, there is a balance here, and the balance was broken down marginally, right? So those kinds of things are always prone to mean reversion. This low would have been broken down multi-day November lows. So the November lows here. So always, if there are no follow through, immediately you can expect some mean reversion to kick in over here. So on the lower time frame, you need to check what are there any AB poor highs, AB poor lows. Price getting back into the balance. So those are the zones where you can target. Let's go and check CAT. CAT. Okay, it was a late breakdown again. There was a G2 as well, so G2 low, and then price liquidated there. It's a G2 liquidation. But it has also broken multi-day low. So the immediate reference is this is what going to be the immediate reference here. So any positivity it has to come. I don't think it will come immediately. Maybe one day of balancing outside this balance, one day activity down below that, and then lately price might try to come into the balance, and then it could come. So they don't take, and when there was a steep fall there, they don't take a direction immediately. So they will be doing 1 or 2 days of balance, and then they're getting back into the balance is what you can look for, and look below the balance and fail kind of setups. It cannot be an immediate long, but it might take. All of a sudden, they might open here and they get a rejection, and end of the day, they again get back into the range, and then they could continue. Usually, they don't do immediately. So, if you want to trade long, you need more time confirmation that at least point of control has to be built above this level. So, above this level, point of control has to build up. You need more time confirmation to take any mean reversion longs. Most of the time price opens gap up, and then everyone thinks like price has been accepted, and it comes down, and it will do a more activity here, and it does mostly activity around the previous day low, and lately price getting back into the range. That is where most of the time confirmation comes. So one have to wait for some more acceptance. Not, I mean, as of now, sentiment is negative, but someone has to wait. It never happens like the price fallen and then it opens here, it rallies. That is very rare, right? So mostly price does some sort of a balancing activity, maybe 1 or 2 days of balancing activity, and then price getting back is a bullish setups to trade for the longs. lot of mechanical reference on the upper side over this 1 and 2 and 3. Total 3 stops are there getting closer. And this is one more top setup here. Dual momentum. That act like a resistance, and price used to go down. That's a dual momentum there. Should say like dual reverse momentum. That is one of the swing high. This is also one more dual momentum here. So dual reverse momentum, right? So it's one more dual reverse momentum here. These kinds of auction can also happen on the downside also. There is nothing much to discuss over here. But there is an over our top, and which is coming at a major swing high. In that case, you need to check for a volume there. If this volume is not a serious volume, this rejection is not a serious rejection. So in that case, price could revisit those levels. There is a ORR here. Price opens gap up and then rejected. It does a decent job when it comes to rejection. Right? So it done a decent job in rejecting those levels. But the thing is that volume confirmation is a little bit of required to confirm that whether it's a strong ORR or a weak ORR. It looks like a strong ORR because initially the point of control would have been built over here, A, B, C, D, and later on the point of control would have been migrated down here. So the point of control was here. So it had been migrated in the second half of the day, and that is kind of a strong ORR so far. This is a strong ORR, and it is an dual momentum. At A period, the sell-off started, and again the A period sell-off started, and both are kind of a back-to-back secure high. So in such a case, the levels here will act like a solid resistance. The second A period high will act like a solid resistance if it is happening at a major swing high. Right? It acts like a major resistance. There was almost price was going for 1, 2, 3, 4 days of sideways, and then price is dropping down. And now we are at the swing lows. Right? So there is a risk involved in shorting this markets because the balance breakout is not clear. So if there is no follow through, usually price get back into the range. So personally, shorting is not a big. It's not a recommended setup here when it comes to fiat because the breakout balance is not clear. Let's also look into Reliance. Because it was kind of showing strength still. The auction is not getting weaker yet. Okay, sorry. It's Reliance underscore I1. So look into the auction. No possible top setup yet. The auction is just keep moving in one direction for the series. It is an. Can anybody say how the bottom came? There was a dual momentum drive. So price was sliding, and then there was one drive and one more momentum drive. And there are two momentum drives creating an auction reversal. Stay away from those auction reversal. Don't try to fade it. Okay, that is the first thing you have to do it. And then it was a P-shaped profile. When it was a P-shaped profile, fresh money comes above that, so that level act like a support. The P-shaped profile acts like a positional support, and then lot of what is this, anomalies, lot of anomalies. But think how the anomalies are coming in. A lot of single prints are involved over here. When a lot of single prints are involved over here, not necessarily it can be faded. So it could be a potential strength. Don't try to fade it again. And again, it was price was going up. This time it is having how many? 1, 2, 3, 4. It's almost four anomalies. It is a poor structure. Only one single print here. Only one single print here. So that single print will act like a support in that case. The supports got upgraded over here. And remaining all the other three nuances got cleared. Then balancing. Now we can see the structure is getting weaker here. 1, 2, 3. Still, it's only 3 anomalies. So we cannot really say that structure is weaker. Again, here, kind of an nothing much to say. There are no weaker structure. There are no weaker reference. There is only one stop down there. But otherwise, there are no weaker structure from Reliance. So Reliance is still showing strength. And I don't say this structure is a weaker structure. This is the structure is not a weaker structure at all. In fact, it could be a trend day, I guess. It's a classical trend day where only one of the day the one time framing got broken here. Otherwise, right from the day start, price was one time framing 1 and 2 and 3. It just keeps on one time framing and it keeps going in one direction. Right. So no, the auction behavior is not showing any weakness yet. So don't try to short these kinds of segments unless there was a weakness coming in, unless there is a dual momentum reversal is coming in, or some sort of top setup and a major swing high G2 is getting formed. Unless those kinds of setups are not there, don't try to short this market. Still, the markets are moving like a stronger auctions. Right? So don't try to fight the markets. There are no prominent point of control here, right? So I'm just wondering why there are no prominent point of control at all. Did I remove that? Prominent point of control is enabled. Okay, anyways, the run. Okay, so nothing much to look from Reliance as of now. The auction is still not weaker. That's the only thing we can look from that setup. No weakness yet. So you cannot use any positional charts. Even if you want to chart these kinds of segments, look for confidence and then try to enter only if there is a low buyer confidence or if there is a high seller confidence. Otherwise, don't try to take any positional trades in these kinds of counters. Still, there are no clear weakness or there are no odds saying that Reliance should go down. HDFC Bank, what happened last Friday? It created a pullback low. but then it also created a G2 high. Created a G2 high. And we are at one of the major swing low. So the HDFC Bank has been slowly dripping down. You can see a lot of short-term buyers came. They dripped down, but it is a multi-day breakout. It is a slow breakout. And the price again reverted back again. There are multiple prominent point of control came. So 1, 2, 3, 4. Again, there was one more liquidation, one more liquidation came. Right. So far, again, now short-term sellers are trying to sell here. That's why we got a poor high. Nothing much on the upper side as well. Again, this is also one sort of an that's it. Nothing much, a lot of stops here. You can see the more the lines you're going to see, more the stops are going to build this band. So a lot of stops would have been happening in this band. It's everything is a double mechanical reference of a triple mechanical reference. So a lot of stops would have been in this band. When you're seeing 3, 4, or 5 levels, all are kind of a clustered stops. So a lot of the stops would be lying in those levels. A lot of liquidity would be lying in those levels. And you're seeing above those levels, more and more prominent point of control is getting created. It's more sign that most of the levels are from the short-term stop loss levels. And ICICI Bank, we talked about it already. Yes Bank also, we talked about it already. On the upside, the stock is making 50%. So in that case, margin call will not trigger for investors. Right? So, but from an inventory perspective, think about how the stock went up. So it spiked up and then spiked up. Only 2 spikes it came. There is no radical shift came in S Bank. So only the name of the CEO got announced. So we could see this as a kind of a scene of crime. Right? So usually I'm not. I'm just saying that one of the places where the inventory went long to too long. It's a neutral extreme day as well. Nothing much to discuss here. So any questions, you can ask any questions on market profile.
Sir, Maruti yesterday, it's dropped almost more than 20%.
Yeah, I think it's a news-based drop, right? 20%.
I don't know, sir. It's a very big.
Yeah, I know that it's a big fall, but I don't think it's
almost 550 points.
I think Z was one of the top loser, and then next is Maruti, and almost 8% drop.
8%, sir. Okay. 750 to 499.
Yeah.
And what is the news, sir? This Maruti?
It's a earnings season, I think.
Okay.
You want to see the profile charts? Let me go and check the profile charts.
So we can browse that, right? Heat map. We have access to this, right?
Yes, anyone can browse it.
Market house heat map. Okay.
me get Maruti charts profile. Since Maruti price chart is around 6,000, we can prefer a TPO size of 1. So I'll right click, I'll go to indicators. I'll quickly select it as 1. So I'll make it as 20. So it is a late news-based sell-off. It's quite big. For a stock like Maruti, it is quite big. What's the top here? So it's kind of a G2 high. It's a G2 high which is coming at a major swing high. And from there onwards, we are getting an initiative drive. It's most likely a secured high. This G2 high and then a secure momentum downside. On the downside, we are getting a momentum. It is most likely an secure high, which formed on 19th and 20th. Or otherwise, these kinds of deep crashes are so one more place here. A lot of anomalies, you can see that, but it is a stronger anomaly, as I said. Whenever the anomalies are coming up with a lot of single prints, don't try to fade this anomaly, right? So that will be very devastating if you want to do with stocks. Even with the indices, don't try to do it. Very rarely it gets cleared. Don't try to fade it. So I don't know. I don't know to say. Maybe the inventory was getting, there was a prominent point of control, and then price went down, prominent point of control, price went down, prominent point of control, price went down. And now definitely inventory would have been went short to too short. Maybe one more balance here, and then one can think about initiating a long here. That's what I can think at this moment. Right? So I haven't done any top-down analysis. Without top-down analysis, probably one more. When there was a steep fall, not every time there will be a sudden reversal will be there. Maybe activity will be building in this band here. So price might open gap up, but then they might try to test the day low. More activity happens over here. Lately, recovery comes. In such a case, one can think about initiating kind of scene of crime, right? So it's a kind of a scene of crime, probably a news-based announcement. 7,000 could be one of the level one can think about fading back. But if there is a continuation, price is opening with a high confidence selling, don't try to fade don't try to expect now at least don't try to expect now towards those scene of crime levels. High confidence selling means still you have to wait for the market to settle down. Still may not be the right location to enter longs towards those. So, but this one level, 7,000 level is always watchable level because maybe it is some news-based sell-off or some earning season. What was the reason for a Maruti sell-off? Let's go back and check what was the reason for the Maruti sell-off. Okay, it's mostly because of Q3 results, right? So fall 17%. Then it's a news-based sell-off, so nothing much to worry about it. So maybe some other day price might tend to find those levels. Just like S-Bank results, Maruti results might have a counter reaction, but may not be immediately. But yeah, it might take bit of time. I mean, we need to check how the is there is any continuation is there. If there is no serious continuation, then that case one can think about trading a mean reversion longs there. Otherwise, no, it's a strict no. Don't try to catch a falling knife. Okay, any other questions?
Sir, that heat map is not coming, sir, that URL for us.
It's marketcalls.in/hm/heatmap.php. You can get it from here, right? So are there any questions? So a lot of deep sell-off happened on last Friday, and most of them look still vulnerable, and some of them are mostly the Zeal and Dish TV are mostly margin call would have been triggered. So that would force more investors to get out of the positions, which is not maybe it's vulnerable to initiate a trade also there, and it is vulnerable to buying naked puts and expecting further to go down. That is also dangerous because already most of the move has been happened. Now more and more option writers will flock in now, and more volatility is what you can experience those kind of counters. Trading will be tough, investing will be tough. It's going to be tough for everyone. Only it's going to continuously the news channels are going to talk in those in those counter. Every other day promoter is going to say something, and that is going to create a lot of volatility, right? So only it's going to be a difficult market. You can go and observe those places, like so the trading or investing is going to be really difficult. So one way to handle those things is that try to take some simple tools and then try to follow that simple buy and sell models. That is where you'll be able to capture those volatility, right? So playing with some sort of an systems like some sort of super trend systems might give you some decent returns on both the sides. So you'll be able to play both long and charts positionally. Those are the places where systems makes more money on a highly anticipated volatility zones, right? So risk is also there, but the reward is even much bigger, because you will be finding an one-sided trendiness and then followed by a one-sided reversals are very common in such kind of counters. But directional bets are going to be really difficult because of the volatility factor. So one should not be putting any fresh shorts or fresh longs there, but rather I would say that go and trade systematically there. Systematically one can make a decent money out of it, both on long side also, both on short side also. But volatility is going to prevail on those kinds of counters where the margin call get triggered. So a lot of emotions has been went through last Friday. That will be anticipated to continue in the subsequent days as well. More and more investors will consider themselves as an exit from those counters because of a margin call trigger, right? So, any other questions? Okay, so if there are no questions, means we are done for the day, and we'll again get back on Monday 9:30 to 10:30 same time, right? Thank you everyone, and the today's notes will be mailed to you everyone shortly once we are done with the session. Thank you.